Today, we are in a conversation with Mr. Sujit Kumar, Chief Economist at the National Bank for Financing Infrastructure and Development. Municipal corporations are at the forefront of providing services and infrastructure needs at our cities. However, over the years, these urban local bodies, they have had their own challenges in terms of revenue generation and their own financing requirements. Municipal bonds, as well as central schemes such as the Amrut scheme and Urban Challenge Fund, have facilitated to a degree the financing requirements of municipal corporations. However, more challenges, they still need to be addressed. With Mr. Sujit Kumar, we will explore the avenues that are available to municipal corporation in terms of addressing their financing needs, as well as how they go about and utilize the various financing models that is available in the country for their infrastructure financing requirements. Additionally, with Mr. Sujit Kumar, we'll also explore the impact of the 50% tariff on Indian exports to the US and how Indian manufacturers and exporters can navigate through this new challenge which faces the Indian economy. So, Mr. Sujit Kumar, really appreciate you joining us today out here at ET Infra. Uh, as I have discussed with you, I think for today's conversation, I would like to really sort of get the entire knowledge that you have in terms of the financing model that we need in this country for the urban local bodies, or more popular known as the municipal corporations, because it seems that the next frontier of focus in terms of financing and all the aspect would be on the ULBs. So if you could just sort of, give us a brief, the existing framework that we have, the existing model that we have for ULBs, because central grants and all this come in, and how would you sort of, view it? Because currently, the ULBs have a very limited sort of a stream of getting their equity or financing. And how do you see the current structure?
Yeah, thank you, Dev. Thank you for this opportunity to connect over a very pertinent theme. In fact, we are at a stage of development where urbanization is going to be the biggest driver of growth. And more than growth, I would say it's the biggest driver for the jobs, which have become so much important for a youthful country like us. Now there are certain numbers like World Bank, last to last month, in fact, came up with a report trying to put a number where this whole urbanization theme plays out. What they assess is that because climate change has also entered the scene, so the developmental challenges have actually accumulated. We are seeing the kind of rainfalls creating havoc in cities, right? Drought years are going to be there. There could be extensive periods of heat which can make very difficult to work in cities. So livability of cities may go down because of climate developments. Those all things are going to impact in terms of the way we plan our cities, in terms of way we plan our city-based population to realize their full potential. Now, just to give you a context, so far we have been spending just about less than 1% of GDP on managing our urban affairs. That's the context. While the government as a whole is spending almost a quarter of GDP, the last tier, what we call of governance at the urban level, is just below 1%, just close to 0.7-0.8% of GDP. Now, the assessments of World Bank peg numbers for next 20-25 years till 2050, close to 2.5 trillion. So every year, it's like you are going to spend close to 1% of GDP. So you have to take a leap. You have to take a leap from what is being done today. And how do we manage it? Because so far the way cities have worked is that they are dependent mostly on center and state for their funds. 2/3 of their funding comes from center and state through devolution. 1/3 is their own resources. Within that, almost 60% comes from let's say property taxes. Now they have to diversify. If they want to get to the pace of urbanization that is underway, they have to diversify their funding sources. Then only they can think of getting projects which are otherwise not funded, right? But what are the options at the table? One is about obviously diversifying the tax base, the kind of amenities that we provide, and whether it can be user pay basis. If users are willing to pay for that service, well and good. But we have seen that there is not much appetite shown by the citizens when it comes to paying for the services. But then we have also seen cases where this appetite has worked really wonders, specifically let's say in toll roadways, right? We have seen this playing at a scale for our national highways, which have taken the game to a very different level. Many of the municipalities have experimented with this even in other facilities, and they have reaped good results to it. So I see going forward, not only they will be working on diversifying their own sources of revenue, tax-based as well as their fee-based, but they should also be willing to tap into the market-based funding which is available. Right now, market-based funding can come either from the banks as well as the bond market. Right. What we have seen so far is that because they have not been very good at managing their books, right? So their access to funds, which is otherwise available, has not been fully I would say harnessed so far. Now, government, in fact, a decade back, they decided to kind of create capacity for these urban local bodies to access those funds. Specifically, let's say the scheme, Amrit. That scheme actually aimed at having 500 urban local bodies being rated, right? So that they can have credit facilities via banks or municipal bond. And I think we have almost done that. 470 odd were already rated, but not many of them have actually maintained their good books. So the agencies have dropped their ratings for many of them, but still 160 plus. I think as we go, they are rated investment grade, so they have the ability to access markets if they need, right? And of that, I would say a couple of more than three. I think 35, 36 continue to enjoy more than A minus. So they can actually tap even bond market where this kind of issuances will be left. We have seen that. We have seen that already at play, and it's coming from the cities which were historically not seen very favorably. Now that is what is, I would say, quite exciting as far as India's urban play is concerned. Now going forward, I think we have to work at multiple levers, and as you progress in your questions, I will be able to tell you what are the levers available to us.
So, I mean, to be very honest, I mean, as I have observed from my end, there are some green shoots, also emerging. Recently, Pimpri Chinwar Municipal Corporation had a very successful, green bond issuance, 200, oversubscribed by, 5.3 times. And obviously, I mean, those sort of, success stories in the, even if it is a 200 is a much more, lesser amount, but the success and also the municipal body itself is rated at, AA plus. Now, how do you see this framework? Because in the entire scheme of things, and the country being so large with several municipal bodies, it's also not prudent to expect that every municipal body will sort of streamline and work at the same level or have the same sort of adequate financing or even rated at that level. So how do you see such developments? Because there are some recent municipal bonds which have done well.
See, I always say that there is an aspirational gap when it comes to our urban local bodies. Some have been really top tier,
Yeah.
and they have been competing for I would say global standards when it comes to delivering of public services. And obviously, if you have aspirations at higher level, you would be looking for everything available at your hand, right? And we have seen with cities like the ones you are mentioned, the kind of projects they are envisaging, that itself is quite encouraging. Waste to energy, for example. Now, waste has been a bigger issue than anywhere else when it comes to India. Solid waste specifically, we have seen dumps of garbage, welcoming our cities. So now that scenario has gone for a change because today technology allows you to make, I would say, useful case for even dump, right? From garbage you can generate electricity. You can make fertilizer. Now all these are possible if there is economic viable, I would say, model for it, right? Economics has turned favorable because technology has moved up. We have seen good cases for that. And then obviously when economics favors, finance will definitely come to you. It's more about terms at which we want to engage with finance, whether it is in blended structure, whether it is the market structure, whatever it is. We can today explore those things.
Right. I wanted to also have your view. As I mentioned, there are some green shoots, coming up. How do you, because in the last few years from the central government also, schemes like the Amrut scheme and now very recently the Urban Challenge Fund, these schemes have been sort of at the central government level, have been sort of conceptualized and sort of, put forward before the urban local bodies. And at least to some of the, municipal commissioners I have spoken to, they have regarded, this sort of schemes very, they have talked about it very highly, the 13 plus 13 sort of benefit crore that they get, which is also helps them in terms of the interest outgo in case they incorporate the same in a sort of a municipal bond offering. Your view on in terms of how the central government has come in through these schemes?
See, the objective of government, especially central government, has been that we need to nudge our ULBs to look for market-based funding, right? One of the reasons why ULBs have not been very warm to market-based funding is because the cost, it appears to them both in terms of operational cost, compliance cost, and obviously the financial cost when it comes to, when it comes to interest. So what this Amrit does is that for issuance, let's say up to 200 crore, if you are able to get 26 crore as a way of assistance from central government, so your servicing cost goes down materially,
True.
isn't it? That helps because that brings almost a difference of almost a half of what you are going to pay otherwise, tapping from the market. And many municipalities which have issued bonds of late, they have in fact, if you look at the size of it, unwittingly, it seems like, converging around 200 crore where the incentives are there. Obviously, it also function of, the kind of projects you are, assessing. If the scale is not very big, the requirement of funding may not be that big, but incentives do have a role to play, and that is visible across the board.
True. Going forward, also, the revenue challenge fund, right? The revenue generation challenge fund from the ULBs is an important aspect. But they are, in a way, we can call them semi-sovereign. I have seen some of the ULBs taking measures like, non-revenue water aspect of it, making, those, really complex sort of water metering machines, making them compulsory to at least ensure that the non-revenue water component sort of, is taken care of. The revenue leakage in our ULBs is a fact, whether it maybe talk about the electricity part, even the, property tax aspect of it. And I'm quite sure when those revenue leakage happens, you don't have a coherent sort of a lot of a framework that you go and tell to the investors, okay, I would like to have some fund from you, but those revenue leakages then become an impediment. How do you see, those aspects which are, these are realities of our urban local bodies, those revenue leakages and all these aspects are taken care of?
See, when it comes to market funding, there is something called DESRA, where you have a reserve created specifically to service your debt obligations, right? State can create that pool for municipalities. It can be guaranteed by some even better rated institutions in that, we have seen cases of ADB and World Bank coming in. Now, these are mechanisms where, you have, first of all, your accounts properly earmarked. Whatever revenues you are doing, you should have escrow, mechanism for it, so that, that can service the debt for which you have raised it. And then there is a reserve which will assure that when there is some, I would say, flip-flops in your revenue, that should be able to service your debt. So your coupon service doesn't suffer because of, fluctuations in your collections of your taxes or, whatever fees that you are thinking of. Now, I think major point here is when we conceptualize a project, right? We have to have a very, I would say, proper, preparation of, projects. That is very important. DPR, what we call, detailed project reports, that becomes very crucial because there, if you miss on something, at later stage it comes to our knowledge that a bigger factor has not been taken in account, and for which related costs have gone out of your hand, and your financing has not been adequate or your collections have not been adequate. Now, these kind of surprises can be taken care of if you have good, institution to handhold you in preparation of those DPR. So advisory services becomes very crucial. Those who with proven ability, whether IFC or institution like us, they can help you through that. So that helps.
Right. Also, one of the aspects, at least that has been now, at least on the government side, they're probably trying to tinker, is with the success of the InvIT, at least in the road sector. At least I heard from some of the stakeholders that especially in states like Maharashtra, maybe they would be thinking of pulling many of the several, assets of ULBs, bringing under one bunch, and then sort of present them as the InvIT sort of a model. Your take on it? How do you see that sort of a process of financing for ULBs?
So InvITs are promising, I would say, innovation when it comes to kind of monetizing existing assets, right, which are revenue generating. We have seen the success with NHAI to be particular.
Right.
We have also seen private sector being very warm to assets on in energy side, renewables and others. Now new I would say uses are emerging, specifically the real estate part and the urban mobility part, where we think of. Now, coming to the ULBs making use of InvITs for unlocking capital from the completed assets that they are sitting on, it's a fantastic idea. But from idea to execution, there is a lot that needs to be taken, right? There are not many municipalities which would have that kind of assets for bundling together, right? But there are municipalities which do have, particularly let's say in Mumbai, it manages affairs which other municipalities even can't think of. It has, it runs hospitals, it has quality educational institutions, convention centers, then there are stresses of bridges and roads, flyovers, which are making it quite, I would say, worthwhile to pay for those services. It can definitely think of bundling those assets which which otherwise can generate fee-based revenue, and parking it to a trust from
Right.
where it can get some money, and it can spend on creating other infra for the city. So this is a very promising area, to be honest. But at the same time, there is a long journey ahead. From center we have to replicate this to state level, and then perhaps we can go to the ULBs level. But we should be at it. We should not ignore it.
Right. Okay. So on this one, I would like to play a little bit of devil's advocate. Now, for us, the InvIT has been a success story in the road sector.
Yeah.
But the road sector, in terms of the toll revenue and of all of those things are very sort of meticulously streamlined. But for the municipalities, if we are to sort of look at an InvIT structure, and how do you sort of, at the end of the day, it comes, pricing your services. I recently, maybe just 2, 3 months back, the Development Authority DDD out here in Dwarka, I think they wanted to put a charge of 10 rupees for entering one of their parks, and that sort of created a lot of hue and cry. So definitely, so because you are a municipality and you're providing public services as well, there is a sort of pressure where you cannot price your, and even the fact that the non-revenue water we talked about, you cannot price some of your services to the optimal level you want it to. So in this case, do you think, even if we do sort of conceptualize an InvIT model for the municipalities, how it would be solid enough to bring in investors' interest?
Okay, in a democracy, you do have such voices of being fair and accessible. However, we have to also see that if you want to expand the choices available to citizens, we have to provide for what one is asking, right? And if a segment of us is willing to pay for a differential service, that's also a right that need to be taken care of, right? So it's not about denying somebody just because they can't afford it, but it also making available something which others are willing to pay for, right? So we have to balance it both ways. Now coming to the avenues where it can be feasible, we have already seen this working in case of I would say a little contentious, but the healthcare. In healthcare, there are hospitals which are catering to both kind of segment, affluent, which we need some priority access. They are also being catered, and the mass segment, which is anyway being catered. It is a way in which they are kind of reimbursed, right? Let's say with now insurance available, I mean, even the poor has access to the best of hospitals, in cities. So we need to find ways in which we can enable access of others. Now that should not stop us from trying or tinkering the existing ways, right?
Right, true. Because the reason I ask is because even for bigger authorities like the let's say the transport for the Delhi Metro, they do struggle. They cannot sort of hike up the prices or the ticket prices at the optimum level. At the end of the day, they are paying. They are sort of giving up public service. Moving on to from the ULBs, one important aspect, rather a major aspect that I would like to have your views on is the kicking off the 50% tariff, and obviously they go up if you also take the MNF tariffs and all. How do you view this? Do you think this would have a major aspect in terms of our economy?
Thankfully, we are not that export dependent when it comes to aggregate demand equation that we know consumption, investment, and net exports. However, we can't overlook 50% tariff, because it essentially means that we are priced out of market for most of goods, specifically where there are substitutes, right? And substitutes with I would say which are taxed more favorably than us, and especially those which also have lower cost structure. So let's say textile, for example. Now you do have competitive, countries which would be very happy to take place in, which Indians are in a way forced to vacate, right? But that doesn't mean that India has all its options closed. I'm pretty sure everybody at different level is working to get through this, to resolve the situation, and we will have that access restored pretty soon. Nonetheless, if you just wish to assess the impact in the interim, last year we had some $87 billion of exports to US, merchandise trade exports, and almost 2/3 of it is now being a part of this tariff net. If we, put assumptions like, if you lose quarter of that, then it would come somewhere close to, $1 to $1.2 billion a month. That's the run rate. So for the balance of 7 months available, we can be pretty close to about $10 billion, right? So that is not a loss for a $4 trillion economy we should be losing sleep over, isn't it? So 20 to 30 bips is what it materializes when it comes to numbers. But having said that, again, I know it works in very different ways. If you are able to find a different market where you can export it, perhaps that can be well mitigated. If you find ways and you find products which can in fact not only offset the loss that you are getting, but you also give you an edge in certain spheres. It can add to the GDP also. So we should not take it for that loss is permanent. It is transitory. It can be very managed, and we need to be open to new markets rather than just being focused on what we have got closed for certain reasons.
Right. So lastly, especially for the exporters, the likes of textiles or even, shrimp producers out there who export to the US market, what does it take? And let's say how easy it is once they do lose out the US market for them to diversify. Is it like the closure of the US market due to the tariff? Is it the end of it all, or they do have the scope of diversifying to the other markets?
So you see, traders are one of the most resilient lot we have seen, right? They have been able to find geographies which were not accessible even by sea. So we should not write them off, first of all. Now coming to the new markets that we are talking about, India has been negotiating trade agreements with a lot of countries on a bilateral basis, which is opening new vistas of trade for us, and are also going to be party to several multinational I would say trading bodies, which we so far have not explored for a variety of reasons. So there is a lot of balancing that is underway. And I'm pretty sure that these traders, which we are just talking about, which are kind of downstream when it comes to creating value, some large supplier has given them order and they're trying to create value for that. They will be able to find other taker than the conventional which is focused on US based. So going forward, I would say perhaps it's a shock in the near term, couple of months they might take to transition, but from a medium term perspective, couple of years perspective, not only the US market should be available to us, but also we will be in the markets which otherwise we would not have considered. So it's going to be win-win from a medium term point of view.
All right, Mr. Kumar, it was really lovely having this conversation with you. Thank you so much for joining ET Infra's conversation today.